Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And I have another amazing guest for you today, and I'm really excited about this interview. So let's get into it. He's from Hong Kong. His name is Kony. He is the co-founder of GAIB. Kony, welcome.
Thank you, Hassan. And sorry, thank you, Jamil. Really honored to be here. So, love to chat with you more on what we do.
Awesome, awesome. So thank you for joining me. And so I want to find out first about your background. What is your background, and is it a logical background for what you're doing now?
Sure. I have a background for both in crypto and traditional finance, as well as on the technology side. So, I entered the industry from a while back then. Before crypto, I was in traditional finance, doing a lot of the credit research, equity research, and private equity investments. And then when I entered the industry, I was mainly at the asset management firm doing a few things like bank, hedge fund, VCPE, real estate, which at that time I got super interested into crypto. That's why I joined the industry and jumped into a crypto exchange, top five at the time, to focus on M&A, mainly helping the exchange to expand outside of China. Uh, that's why we look at M&A on exchanges, wallet companies, esports, gaming, fan token platform. Um, Anything they can bring in users would fall under my radar. And been there for some time. Until then, there was some change in management of the exchange. That's why I left. And after I left, I went back to the old firm, the asset management firm that I first joined, to help start a crypto VC fund together with my partner there. It was only two people, me and the founding partner. So we bring a team from two people to five, and then I basically help with most of the things, including fundraising, research, due diligence, deal sourcing, relationship with other VCs, accelerators, and also like student clubs as well. So really loved what crypto is bringing to the world, and also I'm a big fan of like AI. So that's why I have also been keeping a closer eye on what AI and crypto merge. So for the fund side, for crypto VC side, in the past 3 years, my main focus was to look into infrastructure investments. So that's why we invested into EigenLayer, Babylon, Risk Zero, Linera, Sui, Polyhedra, so on and so forth. These like deep tech crypto infrastructure projects. But other than that, myself, I like every aspect of that. So I also we also look into deep perspective, including DeFi infra, like MEV, supply chain, in-time protocols, and also crypto and AI merge came in around late 2023. That's where it caught my eyes. Because I'm a big AI fan. I've been following with on AI for quite some time. I built my own chatbot, trading bots, and even AI agents with long-term memory long before the craze that we are seeing these days, around like ChatGPT 3 and 3.5 launch. So pretty familiar with the whole workflow of like how do you launch an AI agent, how do you work with them, etc. And it's actually around like late 2023 when the whole market, crypto market and AI market merged. I was like, what's so interesting here? Like, what are the projects doing between the crossovers of the two? So it was at that time that I studied most of the things like talking about data, model, decentralized compute, AI applications on crypto, etc. And that's one thing very interesting. There was nobody talking about finance and AI and crypto crossover, which intrigued me because given my personal background in finance, obviously the thing I saw, the opportunities I saw in the market was in every asset class, there's got to be a finance company that serves the whole industry. For example, in airline, there's aircraft leasing. In car rental, there's aircraft leasing. This car leasing company, and then in other asset class, we have a market for gold, we have a market for oil. Why don't we have a market for GPU asset class, which is the most important AI infrastructure that the AI era needs, right? So it was at that time I had this idea. Well, there's got to be some place for a finance company that focus on this uh, in the market. So I talked to my co-founder, Alex. So he is basically the AI and semiconductor guy. So he's more like, oh, his family runs Realtek, which is the top seven global chip maker these days, making a lot of the microchips like Bluetooth Sangha controller. And then he himself also runs an AI cloud company, so basically servicing computation power to companies out there that want to launch their AI services. So I was asking him the question, do you see there's a need for exactly like a finance company or company that help these AI cloud companies in their senses finance? And he was like, dude, I have been thinking about this for so long. Like, let's do this together. So that's why, like 2 minutes into our call, we have decided to start a company, use some time to polish the idea, fine tune the architecture, and also, I also found my CTO afterwards, which is he has a PhD in cryptographic research, a long DeFi expert that has joined the space from 2016 onwards. Perfect guy that I go to because I can leverage his expertise to actually um, leverage on all the Lego DeFi building blocks to achieve the goal that I want to do. So getting back, right? So that's why my background and the team's background, we have a very diverse background that cover all the three areas: AI, crypto, and DeFi. So make it a good marriage of the three, so can allow us to do what we do here, which is to become like the economic layer for AI compute future.
Okay, fascinating. Um, you pointed out leasing. I don't think of AI and leasing together. So I want to find out more about that a little bit. So you told me what GAIB is all about, right? And you are transforming AI infrastructure investment. So I want a two-part question here. One, how are you transforming that investment? And two, what's going to be the role of leasing in AI?
Yep. Yeah, I just answered the second question first. So like the leasing is basically what I was trying to say. In every asset class, you would have a company there to help you finance the assets, right? For example, for airline, they don't really own aircrafts. Like most of them are being leased to them. Like people help them finance that, right? So that's the whole point of me talking about leasing, because there's always got to be a finance company to help you finance the asset purchase, finance asset operation there. So it's the same thing for AI, because AI relies on a lot of the cloud companies and data centers. They require a huge amount of GPUs to be up and running, to be set up. So we need to have a lot of capital. So you need finance. And what GAIB is all about, how do we transform AI infrastructure? Well, as I mentioned earlier, we are the first economic layer for AI and compute. Make it in simple terms. We transform these GPU-backed assets into yield-generating opportunities, meaning that we also have a product called AI Dollar. So GAIB says synthetic dollar. So the investors can actually invest into it so that they can earn yield from the actual AI-powered compute there. And the problem that we are trying to solve here is pretty simple. Mainly two problems in the market, in the crypto market and the broader market. One is there's a lack of real yield in the market. As Vitalik noted in the crypto industry, we have to break the Ouroboros. The yield has to come from something external. We can't just rely on token subsidies and continuous emission of the tokens there to make people buy into that. It's not sustainable. And then the second problem or that we want to address is there's lack of access to the AI infrastructure investments. So other than indirect ways of buying NVIDIA stock, what are the ways that you think you can capture the AI infrastructure growth? Well, I think there's a way for most people to do it, right? So exactly these two problems is the reason why GAIB is helping to solve. Number one, we want to bring in the actual real yield into crypto, and this yield has to come from something really sustainable source, which is the GPU's revenue being paid by the actual AI demand out there. This company renting the GPUs, paying them money to our cloud company partners. So these are like money-making assets, and we want to bring these actual cash flow into the market. And the second thing is about the direct access, right? So as I mentioned earlier, there's no market to give you direct access to invest into GPU, this asset class. And through GAIB, through us tokenizing the GPUs and also the yield, we can create a new bank product on chain. So it can give you direct investment into the AI infrastructure, which is super important because it's all the upstream AI applications, they all need that. It's basically the engine to power all the AI applications. So that's how we capture the value in the AI supply chain, right? And on top of that, we build DeFi. Like other than tokenization, financialization, we're gonna build DeFi on top. So bringing the physical assets on chain is first step. Second step is bringing liquidity, creating economy. So that's why we'll be integrating with the other lending bond protocols, even setting up our own option futures trading, derivatives, and other structured products, so that we would like to create products with different risk reward profile that fit everybody or anyone's like appetite in terms of the risk, the investment needs, the appetite there. So there's a whole goal of what we want to do to like change the AI infrastructure investments access for people.
Okay. Wow. All right. So, I could get I might get into the real yield versus fake yield later, but you said something really interesting because if I talk to some common lay people, right, my neighbors or friends or whatever, say how you like they believe that AI is the future. So how do you access it? I said, well, I use Chat GPT,
Yeah,
or I could buy Nvidia stock, or if you're in crypto, you're either buying iExec, RLC, or Render. But you're not able, like no one talks about being able to access that core infrastructure like you're talking about now. So
exactly.
why is it important to provide investors with a direct means of accessing AI and benefiting from its growth? Like, what's that going to open up, and and why is that super crucial?
Yeah, so exactly as you mentioned, right? When we tell most people, like, how do we invest into AI? They talk to you exactly. Let's go buy Nvidia stock. Well, that definitely give you some ways to trade stocks like other companies you want, but where's the direct access? So that's exactly what we want to do, provide a direct means for them to invest into it. And why is providing like direct means to invest into AI infrastructure is so important? It's actually very simple. If you want to grow through the whole asset class, always invest in something that captures most of the value, the benefit from the pie, the growth of the pie. And what is the most important thing in the whole like AI ecosystem? I would describe the supply chain or the value capture chain is like it's actually a smiling curve, meaning on the right hand side, these are basically application companies, including Midjourney, Runway, and the other like newer managed AI, like these more like application level of AI companies. They're fighting their product market fit, they're making more money, their pie is growing, right? And then on the left-hand side, what are these? These are AI infrastructure companies, including all the cloud companies, including all the data centers, including NVIDIA, who's making the chips there, right? These AI infrastructure, no matter how big, how application grow, they still need it. So basically, they're enjoying the growth of the whole market, the growth of the pie, and no matter how the market changes, I still think the small curve rule actually makes sense. Meaning, they captures most of the value right now. If you look at how much Midjourney makes, while they're good, many people are using them, but then the money they're making versus the cloud company versus the Nvidia is really a small percentage of that. And I do believe they will grow someday. They will definitely be bigger. If you look at the whole SaaS supply chain, it became like a pyramid to an inverted pyramid, meaning the application captures more value than the infrastructure side. But if you look at the AI pyramid, the AI supply chain, it's still like a pyramid shape, meaning the infrastructure, which is at the bottom, captures most of the value there. And that's exactly what we want to unlock, allowing people to have means to invest in it. And that's a famous saying, meaning in the AI era, compute is the new currency, right? Sam Altman, Elon Musk all say about this. And what's so important about powering up this currency are the AI infrastructure. These are computation assets. And it's hard for you to invest. The reason why it's hard for you to invest is because all these enterprise grade GPUs that OpenAI is using, Grok, Elon Musk X is using, they all come from huge amount, like meaning number one, high cost. One H200 machine easily costs $300,000. There's no layman that you and I, we can just buy a machine, get home, service the other cloud companies their needs there. It's impossible. So that's why most of it we don't have access to it. But through us, through tokenizing these GPUs, making it fungible, making it tradable, people can now like invest into these asset class. And also, if you look at the market, like how is the growth is going? Well, a lot of the capital, a lot of the money is still going to infrastructure investments. Magnificent Seven investment into AI infra per year is $300 billion. $300 billion into it. And Alibaba just announced a $50 billion plan to invest into AI infra in the next few years. Trump, when he got on to office, President Trump gone to office, mentioned about the Stargate 500 billion initiative with SoftBank and OpenAI. So it just tells you we are in a market that is really like, demand driven on the AI infrastructure. There's a lot of demand to invest into this market. We're still early. We want to provide access to a market that's growing, access to a market that's early, and access in a direct way instead of indirectly. So this is like what we are doing, what we're focusing here.
Let's see. All these opportunities that people haven't had before, you're now unlocking and you're tokenizing at the source creation utility level. But you're not just, let's see if I understand this right, you're not just creating tokens, you're actually creating options, alternatives, trading opportunities, a whole entire finance market around the previously inaccessible parts of AI that people wouldn't be able to touch before.
Exactly. Exactly. The whole point that we want to do is, back in the days, gold was super liquid, high trading convictions, hard to trade them. Like, you have to move physical gold, to actually trade it, right? And then afterwards, different types of products or instruments just came out. Now you can trade gold on ETF, you can trade gold on futures, you can trade gold on index fund, or you can trade gold on some other structured products, right? This is a huge amount of financial market that comes out. Like we have a market for oil, for gold, even for orange. Why don't we have a market for GPU asset class? Or even when the other computation assets will come up, there might be TPU. Like we want these asset classes. Like people want. Why can't we trade it? Why don't we invest into them? Right. That's the whole point of us is to break down barriers, allowing and giving access to people.
I like it a lot. I think it's genius. I want to find out, besides investing, besides finance, like, AI has been around for 120, 140 years, right? At least the discussion of it has been around for that long. It comes in waves of every 20 years, and then it stops and then it goes back and then it talk about it again, then you stop. And then now it seems to have historically more momentum now than it's ever had before, right? So what do you see as the future of AI infrastructure? It looks like it's got legs now. So how do you see, in addition to the finance, what do you see possible?
Yeah, I do think for the AI, like not only AI infrastructure, right? So but the whole AI industry, there's a two key thing. One is definitely we're still in the early stage of growth. Um, before ChatGPT was out, the reason why we had a term called ChatGPT moment, where we get a historical number of people signing up to use ChatGPT on OpenAI's website. Um, the reason because of that was before it was launched, we had no idea that AI could be that powerful. Like imagine all those customer service chatbots that you were using, talking to online for your customer service when something goes wrong. They always give you the same answer, like irrelevant, really dumb answer. They was like, "What are you saying?" And also all those like user menu, click, 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 click. But after ChatGPT launched, right, we realized, oh, the machine can actually think. Like we actually hearing like intelligence these days, right? So that's a very important thing. And afterwards, in the past like 2 3 years, there's a long, long debate between like open and closed, like open source versus closed source. We saw a lot of efforts by different giants in the market that just pushing for like open source of the development there. They have their own benefits in terms of how they develop. I don't comment on the both, but I do see that innovation are being driven over the past 2 years for all the competition on the model's intelligence, on the model's performance, on the like AI infrastructure changes there. And the second thing about AI infrastructure, the future I'm seeing is decentralization. Decentralization in the means that before ChatGPT was launched, the most common cloud that we are using globally, mainly three, right? GCP by Google, Microsoft Azure, and also Amazon AWS. But then after AI was launched, there are actually more specific cloud infrastructure being spun up just to meet the AI needs. There are more local, regionalized cloud companies that is coming to provide more specific services to the companies there. The reason behind it is to actually surface these AI models, they sometimes in production grade, they require quite a high performance and also low latency, meaning you don't expect the machines to actually give you a response like after a minute. They want fast responses to have better UX. So in that case, the cloud has to be closer to where the company is based in order to provide the best experience. For example, if that's a cloud company in the States versus a cloud company in Asia, for an Asian company, definitely no doubt he will go for the Asian cloud to get the best experience for the AI models and AI services there. So there will be more and more cloud companies coming up in a more decentralized manner, countering against like always seeing the top three cloud dominance in the market in terms of how they service the AI, how they service the compute. So this is very good because it allows for a whole decentralization of more localized cloud, more infrastructure to be built, so that who get benefited in the end is you and I. Like we are the consumers, we get benefited. A quick number that I can give you for references. I think a year ago, like if you actually run a GPU on AWS, let's say H100 GPU, which was at that time one of the more top tier ones, state-of-the-art GPU, it requires $10 per hour on AWS. And then versus on a more smaller up and coming growing cloud company, they're only offering you like $3. So there's a huge gap in between the cost and between like the cost of using GPU, using computation power. And what benefits it can give is with cheaper cost, with cheaper hosting of these AI models or even training of the AI models, we as consumers can actually get more performant AI services, smarter AI applications, even more specific domain can actually be benefited. They can actually train the models with a lot of cost, right? So we have been hearing about OpenAI using $1 million to train the ChatGPT 4.0, and a lot more newer models require less money. Part of that is because we have a lot more GPUs at a cheaper cost or at a more available to them to be used. So a lot more reasons, and even on the model side, there's more advancements to the model improvements there. So in the future, I do see that AI infrastructure having exponential growth, and also there will be more and more decentralized than what we're seeing these days.
I'm glad you brought up the comment about decentralization, because there's a lot of people out there who think that AI and crypto butt heads. I talk to crypto and AI founders all the time who see a synergy. But there's a lot of people who don't think there's a synergy, think they're opposites. So how do we help get those people to understand the usage of AI and crypto together is beneficial?
I mean, like I was trying to give an example is what we're trying to do here is also to contribute to the decentralization of AI infrastructure. I was basically mentioning for a cloud company to actually set up, they require a huge amount of capital. Like for example, a really small cluster of a GPU, 1,000 cores of H200, which is now the state-of-the-art GPUs. So they require like $30-40 million. It's a lot of capital compared to the other business that you run. And to actually fund these initial capital, there are basically three ways. Either you're super rich as a company through revenue, through your profit, or you go to VC, venture capital, and say, hey, can you invest into us through our equity investments, right? We get the money to buy the GPUs and then get the service out and make money. And the third way is to get that debt financing, borrow money from banks, private credit, high net worth individuals, private lending, etc. Most of the cloud companies out there, because we're still in the really early market, it's very hard for them to get the third, like debt financing. Most of them will go to VC, get expensive like equity investment, or relying on their own capital. So what we're providing them is a new way to get money, get capital, so that now you can grow faster. You can come to us. We help you grow. So the whole goal for us is we service more like more and newer AI cloud companies in this space, so that number one, we're helping the market to grow. Number two, we're seeing more and more decentralized cloud being more and more localized and regionalized cloud company being set up. And exactly these are the people that we want to work with and help them to grow. And so this in this way, GAIB is helping the decentralization of AI. And talking about the other perspective, right? A lot of people are really convicted when they hear about like crypto and AI crossover. They think the two they cannot coexist. But if you actually look at the interesting thing about blockchain, what is giving to AI is definitely one thing is the business model. What Web 1.0 and what 3.0 they differ is because of the token economy. Web 1.0 is also open source, but without a business model, everything becomes very good, which is a good thing. Like TCP/IP, all these protocols that everybody is using them without paying money. And Web 3.0 is we having like decentralization right now, but also because we have an economy, a token economy, the business model can grow, can be more sustainable, so that we can keep on incentivize innovation here. And a lot of people giving tries on this way, including like protocol that through tokenizing data ownership, tokenizing model ownership, tokenizing contribution by developers. They aim to push more. They aim to push for more open source, more decentralized contribution to the market. So yeah, a lot of innovations and in different perspective of AI, blockchain crossover.
It sounds, you said you're doing two things. It sounds like you're doing a third thing, and that is to dissolve the intense capital requirements to access this industry. So,
Exactly. That's what we want. Yeah. And an additional capital channel.
yeah. So, say I don't have this capital, and say, I don't know, I went to a couple conferences over the past year, and I was talking to chip makers in crypto, like Litecoin miners and Bitcoin miners, and they said that their chips they use now to mine Bitcoin can later on be used to access and to be able to build AI. You know, if I have a miner in my house, I'm able to use those chips, right? So, what's the future of the chips, and how can they be used to further expand and grow, this infrastructure network?
Yep. Very interesting point. It is exactly a lot of the cloud mine and a lot of the miners, the BTC miners, like big miners, like big tier, big name, like all these mining companies are trying to pivot to AI because they see that like AI, number one, they has demand. Number two is the AI they have like revenues, like sustainable revenue there. And that's why they also want to diversify some of the risk from just mining Bitcoin. Um, and the point we're talking about chips. Well, mining chips and AI chips are slightly different in the way how they design. Like mining chips are most of the latest sort of mining chips. They are using like ASIC architecture, meaning like application specific chips. So the main function that how they design is to solve the puzzle on the Bitcoin blockchain, to mine the network. And then for most of these like AI chips, they rely on GPUs. And the key difference that is GPUs is highly optimized for parallel processing. So which is needed by AI models to keep it running faster and keep it to run more efficient. So undoubtedly, like in design, they're the same. Like they also have the compute power there. But most of the mining chips are like they're trying to be more suitable for mining for doing AI computation there, but they're not designed that way. So a lot of the like big miners, they still buy NVIDIA GPUs there. Some of them they design their own. For example, Big Deer, they have their own TPUs that was designed to do AI computation tasks there. Most of them sealed by NVIDIA GPUs to set it up. So there's some differences in terms of the architecture, how they're using. Yeah. So that's why in the future, in terms of the chips future, we'll be seeing more powerful chip. If you listen to Jensen in the GTC, which is like 2 weeks ago, I think. So he was saying the future is a power limited economy, meaning the more efficient the machine, it will win. Power is something that is scarce and just limited in terms of capacity. So that's why the whole point of NVIDIA for making chips is not only make it run smarter, run faster, but also make it run more efficient so that it can reduce the computation power there and subsequently the cost for running these AI models, for training these AI models there. And this was also reflected by H100 and H200, which was like the two version. H100 was launched in, I think, 2023, and then H200 was in last year. So H200 and H100, they have similar computation power, like how fast they can solve a puzzle and how fast they can do a computation. But then the efficiency, the power cost for H200 is actually lower than H100, which means that efficiency is being improved. So subsequently, the running that the cost also improved. So that will be I think that will be the trend going forward. Increase efficiency, two ways: reduce power cost, or increase core power computation power there. So yeah, it's very interesting. With that, I would definitely like to see a lot more powerful chips coming up, so that it makes a lot of generations, a lot of computation power for us. Because what I believe is two things. One, we can only do so much with AI because we can only have so much computation power. This is exactly where all the OpenAI, big tech giants, they want full of computation power there. And the second thing is a very interesting thing. Like the invention of steam engine doesn't reduce the usage of coal, but it actually stimulates that. Meaning that the more efficient AI model comes up, the more efficient chips comes up. It doesn't really, reduce people's usage of computation power or AI. But vice versa, we will actually see an explosion of more AI applications, more interesting applications will be spun out. So yeah, I love to see this future. And I do believe that we're in that direction right now.
Now I know what you mean when you said earlier, fake yield versus real yield. The explosion in usage and the efficiency creates real yield. So
Exactly.
yeah, cool. Awesome. So I want to thank you very much for your time today. I enjoyed this conversation a lot. So thank you. I have one last question. How can people find out more information about you, about GAIB? How can they do that?
Yeah, you can follow us on Twitter. Just search GAIBs_AI. And then you can also check out our website, gaib.ai. We have more documents about what we do, about AI dollar, about our pre-deposit bot that we're opening up in April. So stay tuned, follow us, and get more compute. And I do want to give me a little bit at time. It's a famous thing I like in Dune that I want to say it because GAIB's name comes from Dune. We take inspiration from it. And also because just similar to Dune, spice is the most important asset in the universe. In our time, in our AI era, compute is the most important asset. So he who controls compute controls the universe.
Awesome. Thank you very much for your time today.
Thank you, Jamal. My pleasure.